Welcome to The Explainer. Today, we're digging into a pretty big move from the Reserve Bank of New Zealand. They've just cut rates, and we're going to break down exactly what that means for anyone trading the Kiwi dollar.
So, the RBNZ just dropped a bombshell that really got the Forex markets buzzing. Everyone was pretty much expecting a rate cut. That wasn't the surprise. The real question on everyone's mind was, how big would it be? And let me tell you, their answer definitely raised some eyebrows.
All right, so first things first, let's get right into the nuts and bolts of the RBNZ's decision. What exactly did they do, and more importantly, why did they do it?
You could feel the tension in the markets leading up to this. The debate was raging, right? Was it going to be a timid 25 basis point trim, or were they going to go for something bigger? Well, the RBNZ decided to send a message, loud and clear.
And they went big. We're talking a full 50 basis point cut to their official cash rate. That's the OCR for short.
And that cut brings the new rate all the way down to just 2.5%. Now, this isn't just a minor tweak, it's a major policy shift, and it's sending a very, very dovish signal about where they see the economy heading.
So you might be asking, why go so big? Well, the RBNZ basically said it themselves. They looked at the economy and saw that growth was sputtering. They felt that a smaller cut might just get lost in the noise and not really do anything. So they went for the big, clear signal to try and get people and businesses spending and investing again.
Okay, so that's the what and the why. Now for the part that really matters to us as traders. How does this all translate to the value of the New Zealand dollar? This is where it gets real, where the news hits your charts.
It's all about a core idea in Forex, right? You can almost think of a country's interest rate as the dividend you earn for holding its currency. When a central bank cranks that rate up or down, it's like they're adjusting the payout. And that's everything for a Forex trader. And the logic here is pretty straightforward, but its impact is huge. Higher rates? That's like putting up a giant neon sign that says, "Great returns here." It pulls in foreign money, and that demand boosts the currency's value. But when you cut rates, like the RBNZ just did, that sign dims. The NZD suddenly looks a little less appealing, and that can cause it to lose ground against other major currencies.
But here's the real kicker, and you know this if you've been trading for any length of time, the market absolutely hates surprises. And because this 50-point cut was way more aggressive than many were betting on, it just injected a whole lot of uncertainty into the mix. And what does uncertainty breed in Forex? You got it, volatility. So buckle up for some potentially wild swings, especially in pairs like NZD/USD or AUD/NZD.
Okay, so that's the scene. The market is choppy. The question is, what do you do now? How do you actually trade this? Because it's one thing to know what happened. It's another thing entirely to have a solid plan for what comes next.
Look, a good way to tackle news events like this is to think in 3 stages. First, before the news even drops, you're doing your homework, right? You're getting a feel for the market sentiment, forming a hypothesis, then, bam, the announcement hits. This is where patience is key. A lot of traders will tell you it's smart to let that initial chaos die down before you make a move. Let the market show you its cards. And finally, you got to zoom out and think bigger picture. What does this cut really mean for the NZD in the long run?
Now, with all this talk of volatility and opportunity, we have to talk about the other side of the coin, risk. Because when the market gets this choppy, having a rock-solid risk management plan isn't just a nice-to-have, it's non-negotiable. It's absolutely everything.
This is seriously not the time to be winging it. You need a plan, and by plan, I mean you know exactly where you're getting in, where you're taking profit, and where you're cutting your losses before you even click the button. And just as important, you're managing your position size. You never want one single trade to have the power to knock you out of the game. This is how you stay alive to trade another day.
And maybe the biggest clue for what's coming next is something the RBNZ said themselves. They basically announced that the door is still wide open for even more cuts down the line. So think about that. This might not just be a one-and-done deal. We could be looking at the beginning of a whole new trend in their policy.
And that really brings us to the final, crucial question you need to ask yourself. This whole event, it's more than just today's price action. It's a huge signal about where monetary policy in New Zealand could be headed. So, with the potential for even more rate cuts on the table, how is that going to shape your long-term view on the Kiwi? How are you going to position yourself for what might come next? That's the big question to chew on.